Okay, so back again on a different session. So we're going to start first with V25 and see how well it has been playing out based on what we slated as at last week. Last week was whole lot, went as planned, but we actually missed the setups um, despite the fact that we were not actually that active here. So let's continue. So first and foremost, as we initially slated, the market could not rally back into point of interest. So we are still stuck on the theory that we need the market to read this before returning back to internal structure, but anything is very much possible. Now, based on what we still looked at, we talked about the trading balance on, I think, on the 8 hours. It's still visible here, but I think we'll still have to dive to the 8 hours time frame. Okay, so first thing first, we actually aimed that the market should practically return back to this range. Yeah?
Yes, of course.
This, have this, right? And we actually needed the market to rally back into this, give us a proper break of the structure. We've aimed for some imbalances, right? Which is our fair value gap around this perspective. Now, here's the case scenario. Now, we've now had price, but the question here we'll ask ourselves for today is that are we having the market rally back into the POI properly? We have our last break of the structure, which is very visible from here. So we'll still dive to the to the lower time frame. Remember that we already had a few. I don't practically expect the market to rally back here. Anything below this proper mitigation, then we seek for this low to rally back. Then practically these places won't be how do you call it, would not be very much safe. Why? Because the market will be operating on this shift. On this shift, one, if we rally back here, it's more like we rallying back into point of interest to about 80% without taking out external liquidity, which is extremely very dangerous. Very dangerous, right? Because we still have our last break of the structure where the market is reacting. Very nice price action, precisely. So now, throughout last week, we still aimed that the market should walk through this block, market mitigated through, we walked through the imbalance, the market still mitigated through, and we've gotten a proper break of the structure from the right-hand side, which is this perspective, and we are reacting from this imbalance. Now, a very quick question, will the market actually use this area? Because remember, we looked at 50% of this candle, yeah?
Yes, sure.
So we looked at 50% of this candle. So the question now is, okay, we've not dived into 50% yet fully. We're still around the 40% level, or maybe say 50% between this range equally. So now for our time frame that I initially slated, because this low can also be seen as liquidity, right? Which
Yes.
is possible. Now, and if you notice how the market first swept this and gave us a little bit of reaction, right? After sweeping this low, gave us a little bit of reaction, right? More like an impulse away from that perspective. Coming, gave us a sweep and gave us impulse into mitigation. We still have this, remember, we still have this area of imbalance that the market did not actually feel or grab. So we have this reacted through. Can we actually see this as a hunt of liquidity, which is this low it's hunting now into this POR? As I said, anything below this low is a breakthrough for me. That is a breakthrough to taking this, which is actually very easy because first thing first, the market has already grabbed the area of liquidity. We've done proper mitigations, and which I don't actually also expect the market to rally back here after this thorough mitigation might have been done. Yeah. So we will continue. As I say 50% of this range. So 8 hours time frame, we dive to the next time frame, which is 4 hours. Now we have this thoroughly. Good.
Wow.
Now we've had mitigation into this, right?
Yeah,
Clear
that's
mitigation.
interest.
Yeah.
And
So this is equally a very valid point of interest to where the market is actually reacting from. A very valid area for mitigation, right? Where the market also is mitigating from, which is from this perspective, or this low, the market taking this is also extremely active. Why? Because or valid, because one, it took out this major here, right? To confirm us a break of a structure. And we mitigated from this POR, which is still valid, more or less like what we used to say on our concept, that the market is extremely always valid from every point of interest it reacts from, except we see a mitigation through. So now, proper mitigation has been done. We already have 50% of this range we're aiming for. The market is into this block already. We are into this already. We are reacting off there. So we have this. What we want to see is a breakthrough below this to confirm that we need to look for sell case scenarios to continue for this low to be taken. This low is considered a shift in market structure and practically seen as low resistance liquidity, where there was not enough energy, because there are most times we want to see in our concept where the market does something like this before a proper sweep, right?
yes, sure.
So, which is considered as this liquidity, right, as valid that the market gave us a stop hunt or a hunt of liquidity, then a breakthrough, which could also happen. This breakthrough could also happen in form of a displacement. That is an impulse. Could happen in form of a displacement, where we could actually call it initiation BOS. So we have this being deleted. Now, a break of a structure, proper mitigation on 50% of this candle, which I will call, or we call it our base candle. Call it what? Our base candle. Our what? Our base candle. Now, we have this. So we need proper confirmation in the lower time frame to confirm us, probably on the 5 minute time frame, that we have possibilities of buying around here. More like what I used to say, once the market gets to a POI, I want to see validation. It is validation I want to see. Confirmation, because every area is valid for the market. But what validates us as retailers is practically the validation.
Yes, sure.
So we now continue 2% of this range. We'll rally back to 2 hours time frame. Okay, so on the 2 hours time frame, we have this. The 2 hours time frame, we have this particularly, right?
Yeah.
We have that, which is also still practically seen as our order block, right? But from this candle, if you notice carefully, more like what I said before, I always want to focus on the candle that swept liquidity. So first thing first, we had a breakthrough of our fair value gap around here. This is the candle that ran through mitigation. So all this is extremely valid, because this is candle that ran through the liquidity. Now, we are practically waiting for one of two things. We are waiting for the market to dive into this POI, right? Dive into this POI. As we dive into it, we will be seeking forward for a lower time frame confirmation on the 15 and 5 minute time frame. Likewise, maybe probably 1 minute time frame for continuous moves. So we'll dive. As I said, anything below this, I'm actually going to be considering it as sweep for us to rally back into this low resistance. Right now, let's look at this POI as where the market is actually reacting from, because it's very, very important. I mean, so 1 hour time frame. Okay, so now if we check this, because even on the 1 hour time frame, we have something very visible. Yeah? We have this. Right, we have that. So first thing first, then we have our reclaimed. We have this over here. So we're looking forward for the market to dive into a little bit. 1 hour, then 30 minutes time frame. Okay, 30 minutes. 15. Okay, so now if you watch carefully, this is an interest candle here. An interest candle. So we are dancing around it. So 5 minute time frame. Okay. So we need something very clean, proper price action, yeah? Now, if you notice so on the 5 minutes, we did not dive into POI properly, yeah? This is valid. I have a breakthrough from this perspective. One, things I want to actually consider. We have this, but the market did not rally back into at least 50%, which is actually quite dangerous. The market returning back. Then, likewise, or even, I would want to see the market dive into this perspective, which is into this PUI, and until we read this, that is, the market blows this up, yeah, blows it off, confirms me to see this as a break of the structure, then wait for entry confirmation, then wait to see if we blow this. If we blow this, then know that all of this is swept completely. Then looking at this on the long term to as what the market likely do, is liquidity above the market. Yeah. So the weak rejections with the market possibly have to see through. And that is that. So we'll only be waiting for validation, right? On the 5 minute time frame, on the higher time frame. I'll return back to the 4 hours. As I practically slated, I want to be more visible on this particular analysis when the market dips into the POI and gives us confirmation in the lower time frame to continue, right?
Yeah,
That is, if it wants to continue that buy case scenario from this zone, because anything below this low, we are sweeping all of this completely, and this is extremely very risky for the market to hold us on any buy because we've done a shift successfully. And if we dive into this POI, that is 80% of the range. Then since we've dived 80% of the range without taking external, then therefore this low will be sorted for. I think that is actually that on V25. So I don't know what your take.
apparently, like you said my mind, obviously. And let's just wait for what markets will do. Either break the low and we continue downward, or we get a validation and a confirmation for us to continue our buy setup. But apparently, this is just it.
Mhm. Okay.
So we can
Okay.
just
So,
with it.
okay. Okay. So, what else are we looking at? I think I would just have to, as I earlier stated, because I'm actually going to make this, let's make it very clear so that no one actually tends to misinterpret it. Um, Anything below this low is a breakthrough for us to sweep this, which is to be looking out for sell continuation once this low is taken. But for now, since the market is reacting at a very valid POI. We'll be sorting out for buy case scenarios to continue the buy momentum until we are invalidated. Once we are invalidated from this POI, then likewise we're sorting out for more sales continuation. Because one of the problems about we traders is the fact that we see the market react and we do not wait for validations or confirmations. Because the trade with reaction without validations or confirmation isn't a trade. So I think that is that for me on what I actually have to say. So which other perspective should we actually look at?
Let's go to volatility 10-1S.
Okay, 10-1S. That actually gave us, that was, makes sense. Now, I think, now practically on B10-1, good. Now, if we could actually remember this, see what we looked at, right? More like what we discussed in the previous session, where we practically
In
stated
fact,
that
in
every,
my live section on Saturday, I was
yeah,
making the explanation that when market breaks through, can let me see, can you widen it a bit?
okay,
Can
let me put it on the 8 hours time frame.
just yes, thank you. I made mention of the fact that can you zoom in a bit, please?
Mm,
Right. I was making mention of the fact that that was on Saturday, right? I was making mention of the fact that when market breaks this high, when market takes this high,
mm,
just a minute, please, this particular high, that would
yeah,
come back and seek this low. That would come back and seek this low. And after this low has been taken, then we can look for a buy continuation. I
like,
think that was on Saturday morning. And
yeah,
market took out this high, and you can see that we actually came back for that particular mitigation. Like we came back for
mm,
that particular low to be swept before the
yeah,
continuation to the upside. I think I'll
mm,
update that on the channel.
mm,
So,
okay.
yeah,
No, it makes sense. I think everyone there on the channel is actually glowing well in profit.
exactly.
Now, first thing first is that we've gotten a proper break of the structure, which is on the left-hand side, letting us know that the market reacted from still a valid place of POI. Yeah. Then we have this area where the market has actually taken. This area the market has actually taken. Which is above this inducement, which is still valid. Now, we looked at the last break of the structure from the left-hand side, and we also likewise looked at this area, right, where the market is looking at, or where the market is getting to, as an area which is also valid for the market to mitigate from here, because more like what we stated, the market is at the area of what our last point of interest, and based on what we said last time, that the market already had these areas being mitigated through every single area in the marketplace, our concept do not allow us to go back through areas that have been mitigated already. So we want to, or we are faced with areas that have been mitigated, or sorry, have not been mitigated. So a break of the structure, the market came back into just more or less like if we look at this perspective, we don't need to actually dive into the higher time frame perspective. I mean, so a lower time frame perspective for us to know that we had a hunt of liquidity at this low. Yeah, we had a run through a high, had a low, had a high, then we could not break through above this high, then formed a new low. We had to move upward, had the proper break. We came back to sweep this liquidity, which is the inducement, right? Which is very much visible. Now we swept that, which simply means that this area happens to be seen as a valid point of interest for the market to mitigate through. So if we check carefully, still on this POI, we also likewise notice that we had higher highs, higher lows that was formed inside this internal structure on the lower time frame. Now, and this particular low, which is here, is practically seen as an inducement for the market to read. If I'm not mistaken, let's see how well it is here, which is very much visible. Yeah, for the market to what to read. And why is that? This low that is on the lower time frame, because we might not be permitted to dive here. We actually have something like this on the uh, how do we call it? We have something like this on the lower time frame, like this, which is the structure inside here, right? As an inducement, for the market had to come back to absorb. So the market likewise, or even had to come back into the POI that swept liquidity, right? That swept liquidity, which is this candle, and continued. Now, likewise, more like what we were sorting out for, was it when what we needed was what was a confirmation through. We had proper mitigation, where we had our first TP around here. We watched careful, more like what we were looking for. We're not looking out for more TPs or higher TPs, right? Because we knew very well that we are stuck within a range where the market is mitigating through from this, which is from this area. This high is not still valid. This place, the market will likely have to come back above this high if we are buying on V10S, because there is a structure likely want to see this above this high, right? And having to see this as a very valid area of POI, as you stated, every single area has been mitigated through. So it is quite very obvious that on V10S, we are targeting for this high above here in the marketplace, right?
Yeah, sure.
We swept this. This is the valid break of the structure. You watch carefully, we've gotten our BMS, proper BMS above this key level, right?
Yeah.
Because we've done mitigation, swept inducement, gave validation through a week, letting us know that we've exhausted, right? Any break of a structure with this is an exhaustion. That is, we are tired. So gave us a breakthrough above it. We could not mitigate here because there was not enough distance to validate the POI above this key level for us to continue bearish. So we swept it with a wick and gave us a thorough break of the structure with proper displacement, which is impulse, more like what has actually happened around here and what happened around here also likewise or even. So dived into, which is the inducement for the range, then every other thing here formed range structure continuation. Then we have the market dive into primary what? Primary point of interest. So now we aimed for. So the problem now is going to be is that, or the problem that is going to be here is that we will not be able to get an entry yet on the lower time frame until there is proper run through back into a range for us to continue back above this high.
Yeah,
All right,
sure.
together. So because this is actually a very strong impulse, a very strong displacement in price, a very strong one at that.
Definitely. Okay, so
So
I think we should go to volatility 75-1S. I think we made the analysis on Friday. So let's just check on volatility 75-1S and make analysis on that.
okay. Okay. Did we actually look at V75S last time?
Yes, we did.
Okay, that's it. Even. Okay, so yeah, sure. So what we're actually looking out for, yeah, we talked about the case scenario that we this area was mitigated, yeah. I think that was what we discussed. We see that the area was mitigated properly. We had this thorough break of a structure which confirms us that the market has intentions that it's willing to continue. Then likewise, we still have further break of a structure as intentions with proper displacement, proper break to the upside. Yeah. Now we still have to consider this area, right? Because we still have certain imbalances in the marketplace. Now, more like what I'm concerned, the market is valid at every single POI. Every single POI is valid for the market. So now, likewise, or even could actually see how the market dive above, like buy massively above this high, and still come back later into this imbalance. As funny as it sounds, right? So only need to check what the market is delivering on the lower time frame. So I think we'll dive to 4-hour time frame immediately instead of going through the 8 hours. Okay, so now we have this mitigated through where we don't actually expect the market to come through because that has actually been mitigated here. Then we have this, which is an imbalance where the market has properly filled. We had a very clean break of the structure, which is our inhibitors, right?
Yeah, sure.
Which is this. Yeah, so we had our proper BOS, not in BOS actually, because there was no impulse above the break of the structure. So it happened that we sluggishly broke it. So we just call it our minor break of structure, which is our first BMS, right? So now we have imbalance in price. We're having the market mitigate through. from a POI that is not extremely that visible on this higher time frame, and which can also be possible that it's not visible on the lower time frame. So our point of concern is that we have POI below the marketplace. Yeah. Now let's take where the market is mitigating through. So we're mitigating through this POI around here. The question now is that this place, is it valid? This area, is it valid for a break of a structure? For me, the answer is no, it's not actually valid for a proper break of a structure for me yet. If the market breaks through above here, right? I always want to see a situation where the areas where the market absorbed liquidity, absorbed more like areas like this, we swept through yet, then we gave us validation, and this came through. The market came back to mitigate. Now, if you watch this, more like what I used to say, I'm always more concerned what happens within the wicks and the bodies, right? And the open or close. Now, if you watch carefully, the market gave us a sweep above this previous week, which identifies that we actually have liquidity on the lower time frame where the market swept that is not visible on this higher time frame or on the 1 hour perspective. It's still not visible, yeah. So we still dive to 15 minutes time frame. So coming back on the 15 minutes time frame, we still check carefully. It's not still valid here, but we are seeing something actually, an information or piece of information that could allow us to investigate through this analysis. So first thing first, we have the market gave us this here, right? We have this. You can see a break through this candle. What this is the opening after we had a proper down close candle, a close, then we had this high, but we still consider this because this is the week the market swept that is actually visible. We had a proper amount of liquidity on this here. So if there's a place I actually want to consider for an entry, right, on the higher time frame, lower time frame, will be on this candle, right? More like what we see, the candle that swept liquidity, 5 minutes time frame. So 5 minutes time frame, more concerned about around this area, yeah? Right? So this is our inducement for the range. This is the only candle I'm looking forward to for proper mitigation. Anything above this, then it's a no for me. So which is this? I have this POI. I have this POI on a very good Monday morning, 1 hour time frame. So this is the area that is extremely visible for me to look for that sell continuation, right? Until there's invalidation. Anything above this POI, all this is gone. Because above this level is also liquidity as seen around there likewise or even. So POI to continue to the imbalance, or we likewise sweep this, then we have anything above this POI is a proper break of the structure. We look for buy continuation to take this high, right? But we mitigate as the market rallies back here. This is a valid POI for a sell, right? But if it sweeps in completely, we've gotten a PMS. The market rallies back into this POI, then we look for that sell into this low, into the imbalance. Then we take out immediately the market fills into the imbalance. Then we look for buy continuations when the market has given us confirmation to continue to the upside. I don't know how you see. What's your take actually?
Absolutely. So automatically it means if market takes that particular high, that PO high that you've marked out, if we get it invalidated, market is likely to go back and take all the liquidity, take the previous high, then come back to this fair value gap again and hit the low created here for an inducement. Yeah?
Yeah, exactly.
I think I'm also in line with that. That's absolutely okay.
I don't think it's possible for the market because the market will always want to create areas for liquidity where it could actually come back. You could also have this as we had the break, then the market could rally back above this high, come back to stick the imbalance, then we seek for more bias continuations, then validate this place as our area of concern or inducement for the market to read on the higher time frame. And it to be extremely very solid, because if that actually happens, then trust me, we have a very sweet, nice buy, actually, very clean one. And we could actually even hold it to make our 10K, probably even, yeah, probably 10K or 15K, because that's actually the numbers we're looking out for. Anyways, that's the number we're looking at for this week. So that's fine. So let's move forward. I think that is that for today.
So let's watch
Yeah, exactly.
Yeah. Let's go.
Okay, then that's actually fine. That's fine. I think I would just do the whole bit of a setup, then send likewise, or even.
That's beautiful. Thank you.